It's here, folks. It's the first week in a year since like the very first pandemic lockdown that we haven't seen a weekly decline in available inventory. It's Monday, March 15th, and this is your weekly look at the Altos Research data that came in over the weekend for the entire US real estate market. Each week, Altos tracks every home for sale in the US, all the pricing, all the changes in pricing, the supply and demand, and we bubble up those analytics so that you can see the data before the traditional media channels. If you missed our webinar last week, the replay is on the YouTube channel. We spent some time looking at the local markets as well as the latest policy changes that will affect supply and demand as the year progresses. So go to the YouTube channel and check out the March webinar. Lots of good data in there. So here is the big inventory chart for the week. If you squint, you can see at the far right side of this chart, the weekly measure of inventory is at 317,000 single family homes this week. That's basically unchanged from last week. This is the first week in a year that inventory isn't plummeting week over week as Americans have been buying everything in sight. The first week of April 2020 marked the highest inventory of the year last year. With any luck, inventory will be climbing weekly into Q2 and give home buyers a tiny bit of reprieve from the madness that they've been in. There are three trends that we would consider to expect to add a little inventory in the coming weeks. First, it's springtime, and so more people can sell. We'll have much more seasonality this year than we could have last year as the pandemic restrictions, locked in, and they recede now. The second is that rates have ticked up from about 2.6 to 3.1% on the 30-year fixed mortgage. So people buying right now locked in last month in February at the lowest rates ever. But buyers in April will be faced with mortgage rates that are right now of 3.1, so 0.5% higher. And that'll make a difference both on the supply and the demand side. Maybe not a ton, but we'll see. It should be a little bit. And then the third are the Fannie Mae rules that kicked in that they announced last week, which is restricting the quantity of second home or investment properties that Fannie Mae buys in a portfolio. Currently we're at 14% of transactions are second home or investment properties. We've seen that in a bunch of the data where you can see that that transaction volume, but Fannie Mae is saying 7% in their portfolios. So a pretty significant number fewer homes that they'll be able to buy, which will drive up the cost of financing for second homes and investment properties. That kicks in right away. So we should see if that changes the demand in, for example, the Zoom towns that have had the highest demand all year, like all the remote work offices and places where the resort places where people could choose to work remotely. And so we should see very quickly if that starts to change, and we'll keep our eye on that. So those three things will likely help tick up inventory over the next few months. It is fascinating to note that there are well over 500,000 homes under contract right now, which translates into well over 6 million for the year, sales for the year. It's, despite the super low inventory, is a big year for transactions. You can see the insanely high demand right now in the market time measurement. So normally this time of year, the median time on market for homes would be 77 days or 2 to 3 months. Right now we're at 42 days. With many markets, the median days on market is like close to zero. Homes are getting listed and sold in hours or just a day or two. And it's frankly the fastest we've ever seen it. This is actually likely to keep falling because we're not even close to the seasonal buying peak yet. But as new stuff gets listed and transactions happen very quickly in March, April, and May. So stay tuned to the days on market trend to keep your eye on exactly what's happening on demand side for the year. And that, of course, brings us to pricing. As expected, the median home price is marching northward every week. Now, the median single family home price in the US is $359,900 this week. That's almost 11% higher than last year at this time. The next few weeks are going to be crazy for the year over year comparisons compared to the lockdown periods of last year. The median price of the new listings cohort is also up this week. As homes get multiple offers and go over asking, the sellers use that information to price their new listings as they come to market. So that this median price, the green gray line here, the median price of the newly listed cohort also continues to climb each week. This is a leading indicator for future transaction prices. It normally tops out at the end of March or early April, as all the best new listings have come to market, like right at the beginning of Q2. Then it softens a little bit, leading the regular market through June. So we'll keep an eye on that as well over the next few weeks to see if we have a little reprieve, but pricing just remains super strong, demand super high, and inventory super tight. So all of those pieces are still very bullish, obviously, for the year, with maybe just some signs of increasing inventory. And that is the data for the week. As always, stay tuned to the YouTube channel for the latest data. If you are a real estate professional and you work with buyers and sellers and you're investing in your business right now and you need to communicate what's going on, I recommend you just go to altosresearch.com right now and book a demo with us. Get time. We'll show you how you talk about what your local market's looking like and how you talk about that with buyers and sellers right now. There is a link to altosresearch.com in the description below. So as always, visit there, subscribe to the YouTube channel, and more next week.